Get your free copy of the complete tutorial at www.teachucomp.com/free.
You can create liability accounts to track amounts you need to pay to someone else. If the liability is to be paid off within the year, it is an other current liability. If you have a line of credit, that would be an example of an other current liability. You can also create long-term liability accounts for amounts you expect to pay off in a period greater than a year. For example, when you purchase a fixed asset like a vehicle, you typically incur a long-term liability like an auto loan. When you make payments on liabilities, note that the total amount due will often be attributed partially to the liability account, reducing the amount owed, and partially to interest expense. If you make the loan payments within the Write Checks window by hand, be sure to record the correct amounts on the Expenses tab using the associated amortization table for the loan. That way you will know how much of each payment will reduce the amount owed and how much is interest expense. You can also make use of the Loan Manager within QuickBooks to help you in creating loan payments if you know the terms of the loan.
Like what you see? Pick up your free copy of the complete tutorial at www.teachucomp.com/free.